The RBI is going to be meeting between the 5th and 7th of June to discuss monetary policy, and this is going to be an interesting event to watch out for. So a lot of interesting factors are contributing to why this is an exciting event for the market. Firstly, we'll get some insights onto the dividend that the RBI gave to the government of 2.11 lakh crores, which was a record amount. You're also seeing some positive trends in terms of the monsoon. And you have latest GDP data that came out for FY 23-24, which shows that India is in a much better space than we previously thought. So do tune into our Twitter space where we're going to be breaking down the monetary policy of the RBI. This is happening on the 7th of June at 3 p.m.
Adapting to the new reality. We have a new government, but it's a very different government from the previous government. The same person leads it, but it may not be the same. Why do I say this? I say this because during my entire experience over these 35 years, I have learned one thing. In India, coalition politics inflicts a very heavy cost on our economy. In multiple ways, coalition politics tends to slow things down. It tends to drag progress. But that's part of how a democracy works, and we'll just have to live with it. The last 10 years have made us think in a certain way, expect a certain pace of activity, expect change to happen very quickly, anticipate development in a certain way, and based on all these things, engage ourselves in investing in an aggressive mode. Till Monday, this aggressive mode probably worked. But I doubt if the same level of aggression is warranted in the stock market in the coming quarters. The reason is, when the market is supremely confident, it behaves in a certain way. When a market starts becoming tentative, it changes its behavior significantly. And when a market is doubtful and lacking in confidence, its behavior can be completely different. Going forward, we are going to see the market lacking confidence, being very unsure of governance, and always wanting validation. In such a scenario, investors who are already invested may lose patience. They may become fearful of unknown unknowns affecting the equity market, and whenever they see profits, they may want to take the money out. In this mindset, investors would show far less conviction than they did over the last few years, at least 5 years. So it's a very different scenario that we have now. The mood is already very different from what it was a week ago, and probably we will see the incidents of fear come back regularly to haunt us. When there are too many people captaining a ship, that ship can be lacking directional focus. That's what coalition governments can be compared to, ships with too many captains. So this has to change over a period of time, and one captain has to assert his superiority over all the other passengers and say that I decide, that's it. For a captain to say that, it requires enormous courage, enormous positional strength and conviction. We are at a phase where these things have to be built. They are probably being built. It's very early days yet. And a person's bargaining power can actually inflict a cost on equity investing. So, if a politician has high bargaining power and he gets a ministry which he ought not to get, the way he runs that ministry would become a tax on the investors who have believed in that sector. This is not at all true. I have seen multiple ministers who have done this before. They have blundered and made the industry suffer, and naturally investors like us will be the first line of defense. So, we suffer more. This is something which can happen even from here. We will have to wait and see how we turn around from this situation and turn into far more confident investors. I know you will dispute this statement simply because the markets were quick to rebound after the crash on Tuesday. But these revivals need to last, and if they don't last, the market is again going down. So, this is something that all of you have to remember. You have to differentiate between a single party rule driven by a very, very powerful Prime Minister to a multi-party coalition rule run by a committee on the principle of consensus. So, it's early days, we have a long way to go, but clearly this election has set us back by a significant period of time, because a lot of people are going to work below their potential. And when a lot of people work below their potential, they effectively spoil the performance potential of the entire economy. So, this is the risk that this election verdict has actually put on us. And we will have to closely watch how politicians who are going to be in position of power behave in their decision making, in their governance and in their disclosures. So, we will have to be very alert, cautious and not rush into our own conclusions about how growth is going to pan, how inflation will be managed, how the government will be run with everybody on the same page, and how we are going to sustain growth. Let's wait and see. I am as curious as you to know how things play out. Thank you for watching this video.